What if I told you a single pharmaceutical company has seen its stock price surge by an astounding 112% in just 3 years, dominating one of the most critical health segments in the world? Forget the typical slow and steady pharma giants. This company is on a rocket ship, aiming to become the undisputed leader in a market worth hundreds of billions. A company known for insulin and antidepressants is now leading a global revolution in obesity and diabetes care. And that its next drug might be a game changer in Alzheimer's? We're talking about Eli Lilly. And their story isn't just about groundbreaking science, it's about a strategic masterclass that's leaving competitors in the dust. But it's not all smooth sailing. There are massive challenges on the horizon that could make or break this pharmaceutical titan. Welcome back to the Capital Navigator, the channel where we dive deep into the history, strategies, business models, and investment opportunities of the world's most influential companies. Today, we're continuing our exploration of the diabetes and obesity landscape. And after last week's deep dive into Novo Nordisk, it's time to turn our attention to their fiercest competitor, Eli Lilly. With their blockbuster drugs Mounjaro and Zepbound, Lilly is waging an all-out war for market dominance in diabetes and obesity, and they are poised to seize the #1 spot in sales within this therapeutic area. Despite recent falls, their stock performance has been nothing short of spectacular, delivering one of the most impressive growth stories in the global healthcare sector and the broader stock market from July 2022 to July 2025. And here's the crazy part, almost all this explosive growth is tied to one single segment, diabetes and obesity. In this video, we'll uncover the secrets behind Lilly's ascent, examine their revolutionary drugs, break down their financials, and confront the significant headwinds they face, from tariff policies to intense market competition. Founding story. Every monumental success story has a beginning, and Eli Lilly and Company's journey starts nearly 150 years ago. Founded in 1876 by Colonel Eli Lilly, a pharmaceutical chemist and a veteran of the American Civil War, after losing his wife to malaria, he became obsessed with making better medicine, real medicine. The company began with a clear mission to create and manufacture high-quality medicines at a time when many drugs were ineffective or even harmful. Imagine back in the late 19th century, the pharmaceutical industry was a bit of a Wild West. Quality control was a foreign concept, and many concoctions were, frankly, snake oil. Colonel Lilly, a man of integrity and scientific rigor, sought to change that. He rejected the pseudoscience of the time. Instead, he hired chemists, consulted with physicians, and built a business around ethics, quality, and science. He established his laboratory in Indianapolis, Indiana, with a commitment to producing reliable and effective remedies. His initial focus was on improving the quality of existing medicines, and he quickly gained a reputation for integrity and scientific innovation. This early dedication to scientific rigor and ethical practice set the stage for Lilly to become a global leader in pharmaceuticals. They weren't just making medicines, they were building a legacy of improving human health. Historically, Lilly has been a significant player in various therapeutic areas, including neuroscience, endocrinology, and oncology. They were pioneers in insulin production in the 1920s, a breakthrough that revolutionized diabetes treatment and saved countless lives. This early success with insulin cemented their reputation as an innovator in diabetes care, a legacy they continue to build upon today. In 1940, partnered in the mass production of penicillin during World War II, and from 1950s to 1980s, introduced vaccines, antibiotics, and psychiatric drugs, including the blockbuster antidepressant Prozac in 1986, a game-changer in the depression disease. In 1996, released Zyprexa for schizophrenia and Gemzar for cancer. Through strategic innovation and smart R&D, Eli Lilly became a name synonymous with medical progress, but it was the 21st century that would truly redefine its legacy with his treatment for diabetes and obesity. The Modern Lilly. Today, Eli Lilly is a $700 billion pharmaceutical giant, with a portfolio that spans across 4 critical areas: cardiometabolic health, diabetes and obesity, oncology, with cancer treatments, immunology, for chronic autoimmune conditions, neuroscience, mainly for Alzheimer's, migraine, depression. And it all starts with their business model. Heavy investment in R&D, combined with intellectual property protection, global distribution, and clinical precision. Their R&D spending in 2024? A whopping $10.99 billion. That's nearly 25% of their total revenue. And it's not just spending, it's working. Mounjaro, approved in 2022 for type 2 diabetes, became a blockbuster almost overnight. 1 year later, they received approval for Zepbound, targeting obesity. And suddenly, Lilly wasn't just competing, they were dominating. These two drugs alone are projected to be the top-selling medications globally by 2030. Therapeutic Empire. Let's break down Eli Lilly's business across its four main therapeutic categories and see how it's not just present, but dominant: cardiometabolic health, diabetes, and obesity. This is the crown jewel. The market for diabetes and obesity drugs is exploding, worth over $100 billion globally. And Eli Lilly is now at the center of that explosion. Mounjaro, tirzepatide, first-in-class dual agonist, is a GIP and GLP-1 receptor agonist. Now, what does that mean in plain English? It means it acts on two different gut hormones that regulate blood sugar and appetite. This dual action is what sets it apart. While GLP-1 agonists like Ozempic, Novo Nordisk's flagship drug, primarily focus on one pathway, Mounjaro targets two, leading to potentially superior glycemic control in type 2 diabetes patients, and critically, more significant weight loss and even potential cardiovascular benefits, as shown in a recent study. It received FDA approval for type 2 diabetes in May 2022, and its launch has been nothing short of meteoric. In 2023, Mounjaro's sales absolutely exploded, reaching $5.3 billion, a staggering increase from just $482.5 million in 2022. But that was just the beginning. In 2024, Mounjaro generated revenues of $13 billion. Zepbound, same molecule, different indication, targeted specifically for chronic weight management in adults with obesity or overweight with at least one weight-related condition. Clinical trials showed patients losing up to 22.5% of their body weight. The strategic move to get a separate indication for obesity was brilliant. It allowed Lilly to tap directly into the massive and rapidly expanding obesity market without the complexities of off-label prescribing. Analysts project Zepbound could reach peak annual sales of $13.5 billion by 2028, and some even higher, potentially exceeding $25 billion by the early 2030s. In 2024, Zepbound generated $49 billion. Trulicity and Jardiance round out a robust portfolio. The impact of these two drugs on Lilly's financials is profound. Combined, sales of Mounjaro and Zepbound accounted for approximately 37% of Eli Lilly's total revenue, becoming its top-selling products. And beyond obesity, we also have promising drugs in other areas. Oncology. While Mounjaro grabs headlines, Lilly's cancer business is quietly expanding. Verzenio, that's now a leading treatment for HR-positive breast cancer. Jaypirca and Cyramza, focused on hematological malignancies and metastatic cancers, respectively. These drugs give Lilly a foothold in precision oncology, where therapies are tailored to the genetic makeup of each patient's tumor. Immunology. Taltz and Olumiant target autoimmune disorders like psoriasis and rheumatoid arthritis, competing with industry leaders like Cosentyx and Humira for plaque psoriasis. And in neuroscience, this is where the emotional impact meets the business case. Emgality, a top contender in the migraine market. Donanemab, brand name Kisunla, recently approved for Alzheimer's disease. This could be a turning point in treating one of the most devastating conditions of our time. Though not a cure, it slows cognitive decline significantly in early-stage patients. It could redefine how we treat one of the most devastating diseases in the world. But what sets Lilly apart isn't just breadth, it's depth. Their drugs are often first-in-class or best-in-class, meaning they're either pioneering new mechanisms or outperforming competitors in clinical trials. This is how Lilly creates a deep competitive moat: scientific leadership, patent longevity, and clinical effectiveness. As a variety of pharmaceutical companies, Eli Lilly benefit from patent protections. This is the fundamental pillar of Lilly's pharmaceutical business model. The company holds a broad portfolio of patents that grant it market exclusivity for its innovations for a limited period. Mounjaro and Zepbound are protected until 2036 in the US and 2037 in Europe, leaving the company still with multiple years of revenue growth and profits from a remarkable therapeutic area. It's pricing power. Lilly can set premium prices because their drugs deliver real clinical outcomes. Their gross margin in 2024, an incredible 81.3%. That margin is driven by innovative patent-protected products, minimal generic competition, global scale, and efficient manufacturing. Eli Lilly's also have an innovative pipeline. Their innovation engine is running hot, investing 25% of their total revenue in R&D. New research on medications like orforglipron, a GLP-1 oral formulation, ideal for patients who don't like injections. Retatrutide, a next-gen triple agonist with potential to redefine obesity treatment, targeting GIP, GLP-1, and glucagon receptors. The idea is that by targeting 3 pathways, it could lead to even greater weight loss and metabolic improvements. Phase 2 data has been incredibly promising, showing impressive weight reduction. This drug could represent the next generation of obesity treatments, pushing the boundaries even further. Lilly is clearly investing heavily in staying at the forefront of this booming market. Lilly is playing a long game, investing not just for today's revenues, but for tomorrow's breakthroughs. Their heavy investment in R&D and global manufacturing expansion is a smart long-term play. To meet the massive demand for drugs like Mounjaro and Zepbound, Lilly is pouring billions into increasing production capacity worldwide. This isn't just about making more pills, it's about building a robust supply chain that can handle global distribution. This kind of capital expenditure demonstrates confidence in future demand and their commitment to scale. They're not just innovating, they're building the infrastructure to deliver that innovation globally. This also creates a significant barrier to entry for smaller competitors. Stock performance and market impact. Now let's talk about Wall Street. Since July 2022, Lilly's stock has soared over 150%. For context, that's one of the most impressive rallies, not just in the healthcare sector, but across the entire S&P 500. And here's the kicker. This growth is almost entirely driven by one therapeutic segment, diabetes and obesity. Their aggressive focus on diabetes and obesity has paid off handsomely. Although the stock has dropped nearly 20% from its peak in September 2024, if analyst expectations for its core obesity segment are met, along with the successful market entry of other innovations, such as in the Alzheimer's space, further upside could be expected. Mounjaro and Zepbound are so successful they're driving billions in revenue quarter after quarter. Analysts estimate that Zepbound alone could reach $25 billion annually by 2030. If that happens, it could surpass Humira, Keytruda, and other record holders as the top-selling drug in history. This targeted investment allowed them to allocate substantial R&D resources and manufacturing capacity to a rapidly growing market with high unmet needs. It's a clear lesson in identifying a megatrend and then committing fully to being a leader in that space. They saw the writing on the wall. Global obesity rates are soaring, and traditional treatments were insufficient. They didn't just participate, they aimed to dominate. But with that kind of vertical climb, the risks get steeper. Valuation metrics like price to earnings, enterprise value to EBITDA, and enterprise value to free cash flow have all reached nosebleed territory. That means the stock is pricing in nearly perfect execution going forward. The company's PE ratio in 2024 was approximately 60, with a 5-year average of around 63. As a reference, the average PE ratio for the pharmaceutical industry is around 24. This reflects the high growth expectations investors have priced into the stock, especially driven by future sales projections for Mounjaro and Zepbound. A similar pattern of high multiples can also be observed for other ratios. EV/EBITDA, roughly 37 for 2024, a multi-year average around 36, and an industry average of only 14. It's also important to highlight that Eli Lilly's ROIC has remained consistently high, fluctuating around 20 to 22% in recent years. In comparison, the average ROIC in the pharmaceutical industry typically ranges between 10 to 15%, signaling strong economic value creation for the company. Lilly's ability to nearly double this efficiency underscores its competitive advantage and effective capital allocation. Just don't forget, the high dependency on a small number of blockbuster drugs, specifically Mounjaro and Zepbound, also presents a significant risk. While incredibly successful now, the pharmaceutical industry is notoriously competitive, and new drugs are always emerging. A setback in clinical trials for one of these key products, or the emergence of a more effective or cheaper competitor, could significantly impact their revenue. It's the classic, don't put all your eggs in one basket dilemma. But in Lilly's case, those eggs are currently golden. Headwinds ahead. No success story is without its struggles. For Eli Lilly, the challenges ahead are real and growing. The company has found itself in the eye of a storm, battling significant external pressures that could dictate its future. Beyond the scientific marvels and the booming stock price, there are real-world complexities that could pose substantial threats. Intense competition. There's intense competition within its most profitable segments. While Mounjaro and Zepbound are currently leading the charge, the diabetes and obesity market is a gold rush, and every major pharmaceutical company is scrambling to develop their own GLP-1 and related therapies. We've already seen Novo Nordisk aggressively expanding its production and pipeline. Other players are entering the fray, and the competition for market share, pricing, and patient access will only intensify. Several Chinese biotech companies are developing drugs that could compete with Eli Lilly's Zepbound in the global weight loss market. They have shown promising results in clinical trials, potentially challenging Zepbound's dominance.
An experimental weekly injection developed by Chinese drug maker Hengrui Pharma and its US-based partner, Calera Therapeutics, succeeded in a late-stage trial in China, putting the drug makers on track to seek approval there.
This isn't just about having the best drug, it's about marketing, distribution, and securing favorable reimbursement policies. The battle for the top spot in this segment is far from over. Medicare price negotiations. In the US, the Inflation Reduction Act allows the government to negotiate drug prices for Medicare. That could cap revenue from key drugs in the coming years. Given that drugs like Mounjaro and Zepbound are expected to generate billions in revenue, they are prime candidates for such negotiations. This could significantly reduce the revenue Lilly generates from these blockbuster drugs in the crucial US market, forcing them to either accept lower prices or potentially face exclusion from Medicare formularies. This is a direct assault on the pharmaceutical industry's traditional pricing power and represents a major financial risk. It fundamentally alters the landscape for high-revenue drugs. In addition to the ongoing Medicare negotiations, President Donald Trump recently sent letters to the CEOs of 17 major pharmaceutical companies, including Eli Lilly, giving them a 60-day deadline until September 29th to lower drug prices in the US and align them with the lowest prices offered in other developed countries. He warned that failure to comply would prompt the use of every possible tool.
President Donald J. Trump announces actions to get Americans the best prices in the world for prescription drugs.
The proposed policy resembles a most favored nation (MFN) approach. U.S. prices should not exceed the lowest prices charged in developed nations. Under this policy, Lilly would need to adjust its U.S. pricing to international levels. Failure to comply could lead to regulatory actions and the imposition of tariffs. Let's also consider the public and political scrutiny around the cost of these life-changing drugs. While incredibly effective, the price tag associated with treatments for chronic conditions like obesity has led to public debate and calls for greater affordability. This pressure, combined with potential government intervention, could force Lilly to reconsider its pricing strategies, potentially impacting future profitability. Pipeline risk and clinical uncertainty. Mounjaro and Zepbound are doing the heavy lifting today, but what happens tomorrow? If upcoming candidates don't meet expectations, Lilly will have a gap. The company must continue delivering new therapies at breakneck speed just to maintain its current momentum. And this is where Lilly's pipeline comes into play. New research and drug candidates like orforglipron and retatrutide for the diabetes and obesity segment, lebrikizumab for atopic dermatitis, and the expansion of its oncology portfolio with antibody-drug conjugates, ADCs, all play a key role. What if Eli Lilly's biggest challenge is its own success? Wall Street has priced in near perfection. In this environment, staying at the top isn't about one big win. It's about sustained innovation, flawless execution, and navigating politics, science, and public expectations, all at once. That's the price of becoming a healthcare empire. So what can we learn from Eli Lilly? This isn't just a story about a drug company. It's a masterclass in how long-term vision, relentless innovation, and strategic patience can transform a 19th century family-run business into a 21st century juggernaut. Lilly bet early on obesity and diabetes. They built a moat with science, protected it with patents, and scaled it with smart acquisitions. And now, they're betting that what comes next, Alzheimer's, oral GLP-1s, and triple agonists, will change medicine forever. But the stakes are high, because when you lead the race, everyone's watching your next step. If you found this video insightful, smash that like button, share your thoughts in the comments, and subscribe to the Capital Navigator. We bring you deep dives into the business models, turning points, and power moves behind the companies shaping our future. Thanks for watching, and we'll see you in the next one.